Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the monthly chart with the most bullish scenario where we're looking for a finish triple 1-2 and another wave 1 in blue, another wave 2 and then eventually continuation to the upside. To get a better estimation of when this wave 1 might top out in time, we have to compare the previous bull markets with one another in time, giving us an estimation between September 2024 and October 2025, the two fib times on the chart here, taken from the start to the end of the previous bull market to the end of the previous bear market. We can do the same with regards to price levels over here. We can take trend-based fib extensions and compare the previous bull markets with one another. Price-wise, the target would be between 104k and 180k for this wave 1. An alternative bullish scenario is that we have a 5-wave impulsive structure since the previous low over here at about 3k. A wave 1, 2, 3, 4, 5. Wave 3 is extended, reaching the 1.618 to the 2 trend-based fib extension, taken from the low to the high of 1 to the low of wave 2, which is a common target area for wave 3, and wave 4 retraced to the 0.5 Fibonacci, taken from the low to the high of wave 3, which is a common target for wave 4. We're then looking for a wave of 5, and the most common target for your wave 5 is between the previous all-time high of 69k and 180k. So there is overlap between the target area for your wave 5 and the target area of the previous scenario that I've shown, where we're looking for a blue wave 1, then a 2 and continuation to the upside. However, after this 5-wave impulsive structure, we would expect a bigger bear market towards the downside. Looking at the bullish scenario on the weekly time frame, then this is currently the highest probability bullish scenario, unless proven otherwise by moving to the downside and touching 49.3k before taking out the high on the chart here at 73.8k. What we are looking for here is an impulse to the upside, 1, 2, 3, 4, and eventually a wave of 5. Working on this yellow wave 3, and then inside the yellow wave 3 we have the lower degree green count, 1, 2, 3, 4, and 5, with 4 here possibly finished inside the common target area of your wave 4, the 382 to the 05, 57.5k, 53.3k. The common target area for your wave 5 is between the 1.236 and the 0.618. The 1.236 is taken with a normal fib from the high of wave 3 to the lowest point of wave 4, and the 0.618 is a trend-based fib extension taken from the low to the high of 3 here to the low of your wave 4. And this gives you a target between 78.6k and 110.6k. We need to at least move above the high of wave 3 because a truncated wave 5 is very rare, so we want to see price move to the upside, reject somewhere in this area, create a bigger sideways multi-month wave of 4, and then one more push to the upside in a wave 5. On the daily time frame, we are then looking for several bullish scenarios if the low at least of your wave 4 is a finish, which then becomes of course the invalidation of the bullish scenarios. The first bullish scenario I show you here on the chart is a scenario where your wave 5 is the extended impulsive wave. Has to be said that an extended wave 5 is rare. It is by far most common to have an extended wave 3, where you have a wave 1, 2, 3, 4, and then a shorter 5. However, because wave 1 and wave 3 are quite similar in length in price, it gives the opportunity for a wave 5 to be extended, but it remains rare. Nonetheless, we are looking for a wave 1, 2, 3, 4, and a 5 towards the upside. The invalidation in this case should actually move towards the upside to the end of your 4 here, 66.6k pretty much. Looking for a wave 1, 2, 3, 4, 5, and you want to take this high at 73.8k. The target for an extended wave 5 is the 1.618 taken from the low of 1 to the high of 3, lowest point of wave 4, 91.3k. The most bullish scenario, however, where your wave 3 is still going to extend is a double 1-2. 1-2, 1-2, and we are still looking for a much bigger wave 3 to the upside, after which we then look for 2 more 4-5s. In this scenario, the second wave 2 retraced to the 0.382 to the 0.5 Fibonacci, taken from the low to the high of the blue wave 1, which has to be said is an uncommon target for a wave 2, but it is a target area nonetheless. Of course, locally, that means that the invalidation is also 66.6k. It is an important level on the chart. A bearish but eventually bullish scenario is that this structure to the upside is your wave 1. You expect a deeper 2 and then you move up in a 3, 4 and a wave of 5. Most common area for your wave 2 is the green Fips 05786 taken from the low to the high of 1, 64.2k, 59.8k. The 382, a usually minimum target but uncommon, 66k, 886 very rare, 58.2k. However, in this scenario, it means that this has to be an impulse to the upside, a 1, 2, 3, 4, 5 inside wave 1, and that is not clean at all because of wave 4. Wave 4, first of all, is shorter in time than wave 2, which is also uncommon, as by far most commonly you have a wave 1, a shorter wave 2, a wave 3, longer 4, and then a wave 5 to the upside in an impulsive structure. And second, this wave 4 was incredibly shallow. If you take a fib from the low over here to the high, then this wave 4 did not even hit the 0.236 Fibonacci, generally regarded as a minimum target for a wave 4, which of course does lower the probabilities. If we then finally look at the most bearish bullish scenario, as we are still looking for a 3-wave corrective structure and expect continuation afterwards, then we're looking for a zigzag to the downside with a leading diagonal in your wave A corrective structure in your B here, and then continuation to the downside in a wave C. Invalidation is taking the all-time high at 73.8k. Most common target for your wave C is between the 1 and the 1.236, which is still above the weekly invalidation of 49.3k of the scenario I've shown you just now. 54.6k, 50.5k, that is your most common target area, and an extension target is 43.9k, which of course is below the invalidation for your weekly bullish scenario, 49.3k here, so that is not really a level that we want to reach. After wave C though, you are looking for continuation to the upside. If you then go back to the monthly chart and look at the bearish scenario, as it is always important to at least keep it in mind, even though the probabilities might not be highest, it is still good to have it in your mind. So we have a 5-wave impulsive structure finished, wave 1 looking for a flat in 2, continuation to the upside in a bigger wave 3 on the monthly chart. Target for your wave 2 should then be around 6k, 8k, 10k, and commonly wave 2 ends at least after the 0.382, which is September 2025. Now on the weekly chart, what we are then looking for in confluence with that monthly scenario is the flat that you see on the chart over here. Again, the probabilities are not on the side for this scenario, at least not yet, right? We definitely have to move to the downside first, but it is good to always at least keep it in mind. So here we then have that finished impulsive structure in the red wave 1 on the monthly chart, looking for that big wave 2 to the downside and then a wave 3 continuation. Here we have a wave A, B, C, regular flat, a 3-wave A, 3-wave B, looking for a 5-wave C. The 1 to the 105 Fibonacci on the chart, taken from the high to the low of A, is a common target for a regular flat. Now, a regular flat is less common than an expanding flat, and an expanding flat wave B target is all the way up here, 98.2k, 122k. So there's quite a big difference between the target areas, but currently we are at the regular flat target, and in the most bearish scenario, we look for continuation down impulsively for a wave C. Most common target for your wave C is the 1 to the 1.236 trend-based fib extension, 16.5k, 11.6k, extension target 6.5k. Best area of support is the golden pocket here with the value area high of this multi-year range sitting around 10 to 9k. The probabilities for this scenario will only start to increase if we have a significant move to the downside and start to lose some very important levels, starting at least with 49.3k to invalidate that bullish scenario that I've shown earlier. However, the bigger increase in probabilities is taking out this low here at 38.5k. On the daily time frame, if the high is in and we are looking for that wave C to the downside, we are looking for an impulsive structure to the downside. That means that we have a leading diagonal in a wave 1 again a corrective structure in a wave 2, and look for a wave 3 to the downside. A minimum target would be 46.6k, the 1.618 trend-based fib extension taken from the high to the low of 1 to the high of wave 2. The 886, however, is hit, and the 886 is taken from the high to the low of 1. This is a very rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities that any move down is a wave C or a wave Y, which increases probabilities to continue the trend on the higher time frames instead of this bearish scenario looking for much lower prices. Even though we talk about very high time frame scenarios, I do want to zoom into the 15-minute time frame here, as prices ranging sideways in a nice typical weekend range, but you also see this box on the chart here, the fibs taken from the low to the high. Your most common retracement target is the 05 to the 786, is 68.9k, 68.5k. The 382, however, is regarded as usually a minimum retracement target for either an ABC, WXY, 1, 2, 3. And at the moment, we haven't yet hit the 382. Retracing to a 236 or not at least hitting the 382 is rare for a wave X, for a wave B, for a wave 2. So therefore the probabilities locally would be higher to still retrace inside this target box over here, this area. And if we then finally look at the probabilities of the different scenarios, and on the cycle, a monthly chart, the probabilities are higher for the bullish scenarios compared to the bearish one, and the same is true on the weekly time frame. On the daily time frame, the probabilities are higher for bullish scenarios, a continuation of the trend, but neutral about which one. And that is because an extended wave 5 here is very rare compared to an extended wave 3, which would be the case in this scenario, a double 1-2. But your second wave 2 did retrace to a very shallow target, which is uncommon, the 382 to the 05 area. In this scenario here, a 1, 2, 3, 4, 5 is not great because your wave 4 is incredibly short in time and also very shallow. And in this scenario here, if we're looking for an A, B, and a wave C, preferably this was the high of your wave B, and you look for a wave 1, 2, 3, but then your wave 2 also here hit the 886, which is not ideal. So we have to wait and see what local price action is going to give us. And on the 15-minute time frame, probabilities are still higher to retrace inside that fib box that I've shown earlier, as it is very rare for structures to just start moving to the upside and away from the box without at least touching the 382. A 236 is regarded as an incredibly shallow, rare retracement target for both X, B, and especially a wave 2. So probabilities would be higher to still dip into that area. Gonna continue keeping an eye on this local range today. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.